In this video, I'm going to talk about backtesting, a trading strategy or idea. I'm going to explain what backtesting is and why we do it, and then I'm going to show you a couple of different methods in which you can use. I'm making this video because I've had a few requests recently, probably from more beginner algorithmic traders, to talk about and demonstrate how we do some backtesting. I expect a lot of you regular viewers and more experienced traders might find this video a little bit basic, but you might like to watch it anyway because we actually test out a trading strategy idea which could be the start of something pretty good for trading pound-yen forex pair. Backtesting is looking at past data or charts and then plotting out all the trades according to our trading strategy to determine how that strategy performed over that past data. Backtesting is most accurate when you have an algorithmic or mechanical trading strategy. This is a strategy with fixed set of rules or conditions to enter and exit the market. And these rules for the strategy will include at minimum entry criteria, exit criteria, and they might even include a stop loss and a profit target. In the case of the strategy which I'm going to demonstrate the backtesting on here for you today, we just have an entry and exit. But there is kind of an inherent stop loss in there too, but that will become much more obvious when we look at the rules for this strategy. And then once you have those rules for the strategy, write them down and then go over that past data, looking at the charts, and then you can start recording the entries and exits trade by trade. And this is the first method for backtesting, the manual method. Record every trade, recording the entry and exit and adding up the profit and loss for each of those. If you use a spreadsheet, which I recommend you do, then you can quickly create things like equity curves in the form of graphs using your collected data. The big downside of this method is that it's very labor intensive. It takes ages and ages to actually perform. I know because I used to do a lot of it back in the days before I learned how to use any sort of backtesting software. Which brings me to that second method of backtesting, which is using software. There are specifically designed backtesting software, such as Forex Tester, but in this video I'm going to be using MultiCharts. MultiCharts is the main platform that I use, and it does much more than just backtest a strategy, but that's what we're going to focus on today. The next thing I'm going to do is demonstrate the rules for the strategy, which we're going to look at backtesting here today. And it's dead simple, and it's one that I encourage you to go out and try some backtesting on yourself. But just quickly, I know there's going to be some of you who will argue that backtesting a strategy is useless because looking at how something performed in the past has no indication on how it's going to perform in the future in live trading when we put our money at stake. And technically you are right, because nobody knows what's going to happen in the markets in the future moving forward. However, my argument is if something has shown consistent good behaviour, something that's worked well over the past 5, 10, 15 years, then I think that's far more likely to continue working in the same way than something that hasn't worked in the past whatsoever. I'd much rather be trading a strategy which has good past performance than a strategy that has bad past performance. And that's why for me it's very important to see the backtesting results for any strategy before I trade it live. How about you? Do you agree? I'm going to demonstrate this strategy just on this chart here, which happens to be a 60-minute chart. The strategy which we're going to test is a trend following strategy, and it was made famous by the turtle traders, and it's a classic breakout type strategy. And for this strategy we're just going to stick to 20 bars. So if we're looking at a daily chart, we're going to be buying breakouts above the 20-day high and selling short breakouts below the 20-day low, and that will give us a stop and reverse strategy. We'll always be in the market. So if you want to backtest this strategy manually, you're going to want to put Donchian channels on your chart and set them at 20 bars. And here you can see the channels on my chart. The top channel showing the highest high over the last 20 bars, and the lower one showing the lowest low over the last 20 bars. And if we stay over here, for example, what we'd do on this candle here, for example, we would set a buy stop order at the upper channel, and we'd set a sell short stop order at the lower channel. The minute the price breaks above it, so you can see on this bar here, this candle here, the price broke above that upper Donchian channel, and that would have got us in on a long trade. And because we also have a sell short order down at the lower channel, that's actually going to be our stop loss area. So our risk or distance of the stop loss is always going to be the width of the channel, or the distance between the upper and the lower Donchian channel. Let me just switch the strategy on the chart. And you can see, look here, like I said, we broke above the upper channel, so we bought and then we exited the long trade and we entered a new short trade here because it broke below the lower channel. So that long trade there was actually a losing trade. We got in short here, and our stop loss or our next order would be at the upper channel. And whenever the upper channel changes, so we change our orders as well. So in the case of this short trade here, we've gone short, prices have gone in our favour, started to decline, and so has the upper channel started to decline. And what that's doing, that's effectively going to be a trailing stop loss. And if that's going to start locking into profit once that channel gets below our entry price. And you can see we exited for a profit here when this green candle here broke above that upper channel. The minute that happens, our stop loss is going to be at the lower channel. But not only is it going to be our stop loss, it's going to be an order to enter short. And you can see prices rallied, carried on near the upper channel until we had a bit of a down move there, and it got us out of our long trade at a very small loss and into a new short trade, with the stop loss of the short trade obviously being the upper channel. I'll scroll back so we can see some more examples of some trades. Here's a pretty good trade here, a short trade. We actually went long here, which was a false long because we had this big red candle here which took us out of the long trade, got us into a new short trade, and then prices went down, and eventually we got stopped into our new long trade. So we exited that kind of trailing stop loss following that upper channel line, and then into a new long trade. And the times where this strategy doesn't work well is when the market is quite choppy and we start hitting both the upper and lower channel like you see here, until we finally get into a big breakout move like here. We bought in here, and you see that the lower channel wasn't broken until here, so that was a huge winning long trade. For those of you who are interested, I'll just show you the code for this strategy, and it's just 2 lines of code. Ignore the green because the green is just notes. We don't actually need the notes. And you can see we just got buy next bar at the highest high, comma 20, that's over the last 20 bars, and then 1 which is based on the last bar, and stop is the order, so it's a stop order. And then we've got the opposite, which is sell short at the lowest low over the last 20 bars based on the last bar, stop. So it's just 2 lines of code, dead easy when you're programming this in MultiCharts. The testing that we're going to be carrying out on the different time frames is going to be from January 2008 through to December 2020. As we've already got the strategy applied on the 60-minute chart, let's just have a look at the performance report. And that's what the equity curve looks like. So I think you'll agree with me when I say that the behaviour looks like it's been pretty consistent throughout that time period. We've seen the rules for our strategy, and we've seen the results doing the backtest on the 60-minute chart, which consists of nearly 3,000 trades. Just think of how long that would have taken us without using any software. That actually brings back some memories. Now, we could end the video here, but I do want to show you some backtest results on more time frames on pound yen. We've looked at the 60-minute or the hourly, but I also want to show you the results for 120-minute, 240-minute, 480-minute, daily, and also the weekly time frame. So that's going to be 6 in total. To do this, I could create 6 separate charts within MultiCharts and apply the same strategy on each of the charts, and then go through each of those charts or each of those separate performance reports to see what the results are like on each time frame. But I'm actually going to use a different feature of MultiCharts, which is the portfolio trader. And that will allow me to select each of the 6 different time frames and apply the one strategy. And it will show us results for the collective 6 together or individually. But just before we do that, if you're interested in some more rule-based trading strategies, which have already been backtested, then you might like to get my 22-page Beat the Markets strategy guidebook. And in that guidebook you'll find the rules and the results, or for 3 more mechanical or rule-based or algorithmic trading strategies. If you find the link down in the description, then you can get it for free right now. Better still, if you'd like to learn more about rule-based trading, then you should probably enroll in my popular trading course. And in the course, I've actually included 6 more trading strategies. And if you're a MultiCharts or a TradeStation user, I've also included the code so you can import the code and start testing or trading on your platform straight away. Again, links for the course are down below. Let's go and test out these other timeframes using MultiCharts Portfolio Trader. Here we are in the Portfolio Trader, and you can see that we've got the 6 timeframes down here: 60 minute, 120, 240, 480, 1440 or daily time frame, and weekly time frame. And we're going to test all of those with that exact same strategy. So let's look at the performance report. This equity curve here shows the collective performance of all 6 of the time frames, but I'm more interested in looking at them individually. And here they are in list of from 60 minutes right the way through to 1 week, and we can tell that by looking at the number of trades per strategy. Obviously less for the longer time frames. So let's run through and look at the equity curves for each of the time frames. We've already seen the 60-minute time frame back on MultiCharts earlier on. This is the 120 or the 2-hour time frame. That's pretty nice too. This is the 240 or the 4-hour time frame. This is the 480 or the 8-hour time frame. It also works. This is the 1440 or the daily time frame, which doesn't work anywhere near as nice as those intraday time frames for some reason. And lastly, this is going to be the weekly time frame. And the weekly time frame again doesn't work anywhere near as nicely as those shorter intraday time frames. Now you know what the basics of backtesting is, and I've shown you a couple of methods of how we can do it. And we've done that by looking at a very old 20-bar breakout trend following strategy, testing across those 6 different timeframes for pound-yen Forex pair. If it were me, from the backtest results, I'd probably be avoiding those longer timeframes like the daily and the weekly and concentrate more on the shorter timeframes where that trend following strategy just seemed to work much better on that particular Forex pair. These are the timeframes which I think show most consistency over that long period of time, and the ones which are probably more likely to continue to perform into the future, which is what designing these strategies is all about. Well, I hope you've enjoyed the video, and I'm sorry if it was a little bit too basic for some of you more experienced traders, but thanks for watching through to the end. Please give the video a thumbs up if you've learned something or enjoyed the video, and subscribe for more videos like this. I hope to see you next week in next week's video, but until then, this is Jared Goodwin, and thank you.